Alright, good morning. Hello everybody. Bullish Bears Kevin here with another quick video for you guys. Today I am going to be going over sort of just how I create my trade plan, my setups that I look for. And these are the same setups that I send to the community and tell everybody, I'm keeping an eye for this to happen. And whenever we are trading or looking for trades, and as traders, we have to be creating trade plans and setups before the market opens. That way we are anticipating this to happen or anticipating that to happen. Once we have those zones and levels, we aren't going to be chasing or feel the need to FOMO into things because we're waiting for our zones to have some type of reaction in the market. If we don't have anything prepared, we're going to try every single little move we have, right? Everything's going to look good. I'm going to want to go long here, go short here, go long, short, long, short. If we have our plans, our predetermined plans, when the market is in the middle of nowhere, we are okay to let the market sort of form. So with that being said, let's create this trade plan for today. First thing I always want to do is start on a higher time frame chart. Sometimes I'll look at the daily, 4-hour, sometimes the 6-hour, usually the 4 though. And just to get a sense of direction, obviously we have been making all-time highs in a lot of stocks and a lot of equities, ES and Q all-time highs. Really good stuff so far. We had CPI the other day. Was it CPI or PPI? Let me just double check in our news and earnings. It was CPI, right? That was CPI yesterday that dropped the market. Now, I see we're already making our way back up there. And what I noticed was we have a 4-hour fair value gap right here. So here's a 4-hour fair value gap. That's this candle. So the top of this wick to the bottom of that wick, this candle, there are unfilled orders. Now, if we break it down to a smaller time frame as well, we have an hourly fair value gap right above that, but they do start to overlap. Now, as well, we also have that CPI swing high that we had before we had this massive drop. So what I'm seeing at this point is we're going to have a lot of sell orders, a lot of stop orders sitting at this buy side liquidity / CPI high. So with that being said, I'm going to look for potential short entries once we cross into this 4-hour fair value gap and break this buy side liquidity. If we do break right through it, no problem, I might look for the 1-hour fair value gap to pan out. I wanted to see which one would hold stronger. A little bit of a trial and error situation with the fair value gap, see what's going on with that. I do like bulls to the upside. We are breaking, this is a 45-minute supply zone right here. We have the long upper wick, small green body, nice continuation lower. We are breaking above it. I would like to see us break above, retest, and continue higher. And then target up there. Or we could even see us come down to this fair value gap, the 30-minute fair value gap, right? So again, what I'm doing when I look in the market is I find these zones that have high anticipated volume or highly anticipated moves. I'm not trying to trade this chop over here because I don't want to buy the highs and sell the lows and end up taking loss after loss. Instead, I want to wait for us to maybe possibly break the range to grab liquidity, if it's an area where we're breaking to grab liquidity, like a liquidity sweep or fair value gap, and then enter there. So all the breakout traders who are going short, when we have some type of area of support underneath this range, are going to get trapped where I'm going long. I'm going to become the quote-unquote institutions filling that breakout traders, those retail traders' orders. So go long somewhere where traders look to go short. That's exactly what we got on Friday's trade, guys. Don't forget, check out that video, the NASDAQ trade review I put up. Really, really a great video. I'm going to make a short of it as well. So again, really great stuff. So fair value gap entry on the NASDAQ. Target would be buy side liquidity up here. We're looking at a 5-to-1 risk to reward on that. I mean, 6-to-1 really, if our entry's right at that fair value gap. So it all depends, right? It depends on our entry. It depends on what we're looking for. So this would be trade setup number 1 that I'm looking at, right? Fair value gap. We have this key level, 17,706. So a few things sort of lining up over here. Again, the other position, the other setup I'm looking for is potentially a short position inside the 4-hour fair value gap, and that is with the buy side liquidity as well. Now, if we don't get a fast rejection, I'll be looking at the 5 or 15 minute time frame for this. If we don't get a quick rejection off of this buy side liquidity, I will most likely not be taking this trade. See, what I'm doing is I'm setting parameters for my trade plan. I'm not just saying if it comes over here, I'm going to buy. If it comes over here, I'm going to sell. I'm saying if it comes over here and reacts the way I expect it to, I will buy or I will sell, depending on the setup. But I can't just blindly jump into a trade just because it's at my zone. Because then I could get in right here, and it could go, boom, stop me out in 5 seconds flat, right? I don't want to be caught up in a trade like that. Friday, I believe it was actually Monday, we had a trade setup that we were looking for on the NASDAQ, and Monday was really, really a great example of being patient. You know, the whole day, the whole stream, hour and a half, we did not take a single trade because the market was dancing above our entry, gave us a strong move before even hitting our entry. We ended up taking a scalp on that towards the end of the day, and then we did get a nice setup, which was great, but that's what I mean about patience. We let the market trade all day, ups, downs. Where's Monday? Where's Monday? Let's see if I could find exactly what I'm talking about. Monday. All right, here's Monday. So I wanted some long positions at this 18,000 level, right? Monday opens, we come down towards it. I missed the entry, right? Because it did not come to there was a demand zone, and there was also, again, the key level. Did not get the entry. Market starts pumping, it's pumping without you, blah, blah, blah. Well, once we got around to this 10:45, 11, I said, all right, well, let's when in doubt, zoom out. Let's look at the range. Let's look at what direction we're in. So the 15-minute was in a nice, strong uptrend. We grabbed some long positions right over here. This was coming back near VWAP, and I noticed the 15-minute looked very strong. So I went light in some long positions, added with confirmation, and we took a nice scalp. Now, did I catch this whole move like I would have if it hit my 18,000 key level? Absolutely not. But the market's never going to give you the full move. The market's never going to say, okay, here's the whole thing. You'll never get the whole kit and caboodle, right? That's what some people say. But we got to get a piece of the pie. We have to be consistent enough and take high probability trades that we're not going to be chasing, that we're not going to be throwing money away. Like, be able to take 2 or 3 really, really great trades a week, and you'll be able to be a profitable trader. Once you are able to manage a good risk to reward, a good risk management, 4-to-1s, 5-to-1s, you're really able to soar in trading. 5-to-1 risk to reward. You risk 1,000, make 5,000. You win 2 trades, right? You're up 10,000. You could go lose 5 trades. Not saying you should go do that, but you go lose 5 trades and still be up $5,000 minus the commissions and stuff. But my point being, you don't have to be right more than you're wrong with trading, and you could still be profitable. With that being said, finding good areas of interest, high probability setups, areas where you know to be patient for, it's really helpful on the psychological aspect to let us be patient, to know, okay, if I'm patient, patience pays in the market, so I'm going to be patient for that. So the couple setups I'm looking for on the NASDAQ today, we are looking for this long position off the 30-minute fair value gap to the upside around 17,738. 17,730, I should say, is the entry on that. Stop 17,706. I will say, again, be careful on this trade. If we do want to break below this fair value gap with bears being strong, we might get an inverse fair value gap trade setup, and I might look for something like that, targeting the next fair value gap, right? So this trade would be more of a 3-to-1 risk to reward versus this one is a 6-to-1, right? Plus bulls have been in control, so I know that, probability wise and risk management wise, this looks more ideal, but just because it looks more ideal doesn't mean it's higher probability. But I'm adding the probabilities up. I'm adding the reasons up, right? We have VWAP started lining up in the zone as well. That's heavy volume on that from pre-market. We have this fair value gap. That's a lot of unfilled orders. We even have a fair value gap on the 15-minute here as well. I'm sure we have a few on the 5-minute too. So again, there's a lot of unfilled orders, a lot of volatility, and just liquidity sitting over there, I should say. There's a lot of liquidity sitting in this 17,730 area that I'm going to want to take advantage of. When we start selling off, or if we start pushing lower, and everybody's saying, oh, go short, this looks so great for shorts, we're creating lower highs, well, we're going to get caught up in some buying volume. They're going to get trapped, and we could see a push higher from here. So I have my alert set for 17,731. That way I get alert right before it's about to break into it. And I have my alert set for 17,870. That is for the buy side liquidity up here as well. So again, when we're looking for trade plans, in the mornings when we're trading as traders, we should be coming up with pre-market plans, and we should be coming up with potential trade setups that we will look to hit. Now, if the market trades within these zones, within these ranges, it just wants to go up and down and up and down and up and down, right? And we're just not going anywhere, but we're not touching buy-side liquidity, and we're not touching this fair value gap. There's a good chance I won't take any trades until we do. That will be the range. I will wait for a break to either side. That break is normally the fake out or the break of structure before we end up moving back and capturing that liquidity. So again, I'm going to be looking for a rejection or reaction off of the buy side liquidity and 4-hour fair value gap, or a reaction of the fair value gap on the 30-minute. So those are going to be the setups for today. If we break below this 30-minute fair value gap, I will look for an inverse fair value gap. That is when we break below it and use it as, almost like when we break above supply and use it as demand. When we break above or below a fair value gap, it's inversed, right? So that's another good way to look at it, because it's still an area of interest, a zone where there's a lot of volume at. So those are the setups for today, guys. Today's date is February 14th. Happy Valentine's Day. I know my Valentine today is the NASDAQ. But I hope you guys have a great day. I hope you guys catch some trades. Let's see if these trades set up. Catch you guys soon. All right, peace.